Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about all the cues for trade, the stocks in news, all the results that came in after the market hours. And of course, we'll also be getting all your stock-related queries answered by our expert on the show. If you have any queries, send them in to us on our YouTube feed and we'll have them addressed by our expert. But before we do all that, let's take a look at the top headlines at this hour. Contagion fears spark a broad-based sell-off on Wall Street. All the three major indices shed over 1%. US regional lenders PacWest and Western Alliance both tumble at least 15%. Just a day after JP Morgan's acquisition of First Republic Bank seemed to bolster confidence in the sector. All eyes on Fed rate decision due later tonight. Majority expect a 25 basis point rate hike from the US Central Bank. Asia too edges lower. Markets in Japan and mainland China are shut for a holiday today. SGX Nifty suggests a subdued start for the Indian market. Meanwhile, oil tumbles overnight, losing as much as 5%, with Brent trading around $75 a barrel. Concerns around the US debt default and expected rate hikes from the Fed and the ECB weigh on oil markets. Tata Steel reports an all-round beat in the fourth quarter, led by strength in Indian operations. Meanwhile, Ambuja Cement delivers a strong show on the back of healthy margin. In key earnings to track today, Titan will report its fourth quarter results. The street expects a good quarter. Margin and outlook for Q1 FY24 will be closely watched. Cash-strapped airline Go First files for bankruptcy before the company law tribunal. Suspends operations on the 3rd and 4th of May, citing fund crunch. Aviation regulator sends a show-cause notice asking why action should not be taken for the inconvenience caused to passengers. Well, we'll be talking about all the cues for trade as promised. But before that, let's go across to Manisha Gupta and figure out what's happening in the oil markets. We saw the Brent crash somewhere around 5% and it's back near that $75 a barrel mark. Manisha, hi, good morning. Good to have you on the show. Tell us what's happening. Why the slide in crude prices?
Oh, well, yes, there have been demand concerns to begin with because we've seen very uneven, fragile data coming out of China, and the supplies are in plenty there, even with the OPEC and Russia cutting production from May until December 2023. Look at the latest number that we've seen come in from Iran, and the crude out surpasses 3 million barrels per day there. So clearly, OPEC continues to overpromise, underdeliver. So we are looking at higher quantities continuing from OPEC as well. And not just the crude oil prices that declined 5% overnight. There are demand concerns is the reason you've seen gasoline and heating oil prices also decline by 5% in the overnight market, and the prices now are trading at the lowest since December 2021. The markets have seen weak economic data, whether it has been about manufacturing numbers, jobs data, service sector, factory order activity. All of these data from China and US have come in lower than what the street was anticipating, and that is the reason you have seen constant pressure come in for crude prices.
Well, constant pressure on crude prices and, of course, the Fed's decision on interest rates will also be crucial to watch. Thanks a lot, Manisha, for taking out time and joining in this morning. Before we delve deeper into Tata Steel earnings, let's go across to Rahul Ghose, who's the founder and CEO of Hedged, and figure out about what the cues are looking like for the Nifty. Good morning, Rahul. Good to have you on the show. Well, 6th straight day of gains coming in on the Nifty, above that 18,100 level. But looks like today we're going to snap out of that 6-day winning streak on the back of negative global cues coming in. What's your sense?
Very good morning. So absolutely right. Currently, Nifty, if you see, closed around the 18,150 mark yesterday. And this region between 18,150 and 18,250 is actually a congestion zone and a resistance area for Nifty. So it might become sideways over here. If you look at the open interest data, short straddles are being created around the 18,000 mark for Nifty and around the 43,000 mark for Bank Nifty. This indicates that prices will not have a runaway rally from 18,000 levels in Nifty and, of course, 43,000 in Bank Nifty. Two schools of thought over here. Nifty has a very strong level of demand between 17,850 and 17,500. This area is a very, very strong support from multiple angles. So if you see Nifty correcting closer to 17,850, the whole prognosis will be to initiate a long. On the flip side, if you see Nifty crossing 17,250, I beg your pardon, 18,250 and sustaining above 18,250, then an inverse head and shoulder pattern would get confirmed and the next up move of the rally would start. So currently it's right in between If it comes down, we have a level to go long. And if it again breaks out above 18,250, we have a level to go long.
Right, Rahul, hold that thought. We'll come back to you and discuss specific stocks. But before that, let's go across to Gaurang Shah of Geojit Financial Services to decode the Tata Steel numbers that came in post-market. Good morning, Gaurang. Good to have you on the show. It's a strong show coming in from Tata Steel, given the fact that, Street was expecting an over 90% drop in profit. But they've seen a drop of somewhere around 83% or thereabouts, which is better than expected. In fact, lesser than expected, if I may say so. And Indian operations are particularly strong. What's your first take on the numbers?
Well, I think a little bit of pleasant to see those kind of numbers coming out better than what the street had estimated. Having said that, I think realization per ton is something that we need to focus not only for Tata Steel but most of the other steel manufacturing companies, Nandita. And first of all, good morning to all of you, and it's great to be on your show once again. So we do have a coverage on Tata Steel, but if you ask me where to buy Tata Steel, I think somewhere close to about 100 rupees or below 100 would possibly derive a little bit of more comfort zone. And those levels again, I think one should not rush into it. Stagger your buying at those levels, park some money at 100 or below 100, and then when you get dips, you should gradually go ahead. Most important thing, Nandita, to notice over here for the entire metal basket is the cost of raw material has kind of come down to a certain extent, and most of these companies have able to put in operational efficiencies. Thereby, one can expect a little bit of better margin going forward from here on. And not to forget, I think government is spending on infrastructure. Cement and metals are the two commodities that you need to make a durable and a long-lasting modernized infrastructure. Along with that, you have improvement in real estate, capex from private sector. So there are positive tailwinds as far as the domestic triggers are concerned. Along with that, some of the top managements were also quite verbal that they are going to increase the flat and the long product prices. So there are positive days lies ahead, but one needs to be a little bit careful at what levels one gets it.
Right. Gaurang, you pointed out all the tailwinds when it comes to the domestic business. But of course, Europe remains a cause of concern. In fact, they've also flagged off UK as a problem area. Given the fact that even, Chinese market or Chinese economy reopening hasn't really spurred up demand as was being expected. What is the outlook on the foreign end of the business going forward? Do you think Q1 will see some improvement, or do you think, the problems will persist when it comes to the European operations?
So honestly, given the kind of data points that we've had from UK, from Europe, even in the US, I think it's going to be more than, a quarter, at least 2 quarters, provided subject to whatever decisions and steps the respective governments and the central banks take in their respective country. And those steps enable the growth story to come back and consumption to come back, and more importantly, Nandita, inflation to rein in. I think these are some of the important factors. So I don't think it's going to be a month, but for the export market, especially for the metal sector, to look a little bit more greener, I think you will need at least 2 quarters, 6 months, or a little bit more than that. Only then you will see some kind of improvement from the demand from those countries and from supply from our side to their side.
Right. Gaurang, since you are here with us, I would also like to get in your thoughts on the cement pack, given the fact that Ambuja has reported an okay set of numbers, and brokerage views are also pretty positive on this stock going forward. Morgan Stanley is saying that the risk-reward looks balanced. CLSA has maintained rating at underperform and has a target of 395 rupees a share, and it is factoring in a 9% volume CAGR over FY23, FY26. We also have queries coming in on Ambuja Cement on our live feed. So I would like to know your thoughts on Ambuja and whether one should look at entering this stock now.
So as a disclosure, Nandita, we have close to about 6-7 companies, both in the large cap and the mid cap universe. Ambuja happens to be under our coverage. That's again a disclosure. And like I mentioned a while back, I think these are the two most important commodities, metals and cement, to have a durable and long-lasting modernized infrastructure. And the way government is spending not only in the urban or tier 2, tier 3 cities, but also in the semi-urban and rural India. Pradhan Mantri Awas Yojana, Pradhan Mantri Gramin Sadak Yojana, affordable housing, housing for all, improvement in real estate sector, private companies going into capex, government spending on infrastructure like dedicated freight corridors, airports, ports, expressways, highways, you name it. Metals and cement is definitely something that you need to make all these things. This sector also, Nandita, was a kind of victim of high input cost and raw material prices going up. But here again, I think things have kind of settled down and operational efficiencies has built in a more better number for all these companies. And especially the case with Ambuja is something, you need to be a little bit careful as far as the news flow is concerned. But we do have coverage on Ambuja, ACC, Ultratech, Grasim, to name a few amongst the large cap boys. In the mid cap universe, we like Shree Cement, Dalmia Bharat, JK Lakshmi Cement, Ramco Cement. These are some of the coverage in the mid cap universe.
All right. Hari Shankar had a query on Ambuja. I hope that answers your query. Thanks a lot, Gaurang, for taking out time and sharing your thoughts on the metals as well as cement pack. We'll, of course, get you back on the show when we have more metal earnings trickling in. Thanks a lot for joining in. Well, with that, let's go back to Rahul and talk about specific stocks. Before I talk about the stock of the day, I want to get in your thoughts on Datamatics, Rahul. Yesterday, this counter saw a 20% rally. In fact, we also have some queries coming in on this stock. How would you approach this stock now? How should one go about approaching this stock now?
So it becomes very difficult to enter a stock if you have 2-3 days of 10 and 20% rally, because all the momentum indicators go haywire and it gets into oversold territory. So the easiest way to play this is wait for a small intraday dip, which gives us an entry, because no doubt it is in bullish territory. It is at all-time high. The rate would be around 395 if somebody wants to have an intraday entry. Until then, I wouldn't suggest to play this from a short-term basis because of sheer overextension on the upside.
All right, Debu K had a query on Datamatics. Hope this answers your query. Wait for dips to buy and avoid buying at the current juncture. Let's now talk about the stock of the day. According to me today, the stock that we should be watching out for should be Titan, given the fact that fourth quarter numbers will be coming out today. Margins and Q1 outlook are some things that you need to watch when it comes to Titan. Q4 revenues are seen up 25%. Profit may jump 50% on a YY basis, and margins are seen at 11.6% vis-a-vis 10.7% last year. And what we'll be watching out for from the management commentary will be outlook on demand, competition, Akshaya Tritiya sales, and the likes. If you look at Titan, how should one approach this counter ahead of earnings, Rahul?
So Titan is looking good on the charts. It's constantly forming higher highs and higher lows. And currently it's at around 26.65. If it crosses and closes above 26.80, which is I think 0.5% away from our current market price, we should go into the results as well as for the short term using bullish strategies or go long. So 26.80 is the level to keep in mind. On the flip side, one should look out for the 20-day EMA, which is around 2600. So anything below 2600 nullifies this, and the stock becomes bearish and it breaks the higher high, higher low pattern, which is currently making.
Right, so that's the call on Titan. Charts looking good. But let's take up a query on the realty sector. This one is coming in from Suresh Shankar, and he wants to know whether or not the realty sector is breaking out and what are the stocks that one should look at buying at the current juncture. If you look at the realty pack, it's gained somewhere around 13%, if I'm not mistaken, yes, over the last 1 month. And of course, we have seen some traction come in after RBI policy last time, right? So what stock should one look at from the realty pack now?
So he's absolutely right. The real index realty pack is actually breaking out and has broken out actually. It started with DLF. DLF has had a stellar rally. You look at overall realty, all of the stocks are looking good on the charts. If you ask me my preferred pick, I would stick with DLF. The stock is currently trading around 424. So one can initiate a buy at 416 and maybe keep a stop loss around the 400 levels and go long on the stock. Even Oberoi Realty has a demand zone very close by, but out of the two names, I would stick to DLF purely based on momentum on the upside.
Right, DLF looks attractive when it comes to the realty pack. We have a query coming in on Team Lease. This one is coming in from Chirag. Would you advise investors to look at this stock now, Team Lease? How does it look on the charts?
So Team Lease has actually, right from February, never managed to close above its 20-day EMA. The 20-day EMA normally becomes the first barometer to see whether the stock is an uptrend, is it going sideways or is it going down? And because it is struggled to do so, we would not initiate a buy on it. We shouldn't bottom fish in stocks basically which are in such a stellar downtrend. And if you look at the Team Lease chart right from 2021 October, it has been struggling and it's in a downtrend. So no, we would definitely not initiate a buy right now until we see some positive signs on this.
Right, so that's the call on Team Lease. Let's take up a query on Tech Mahindra. It was one of the top gainers on the Nifty yesterday. Marcus Hunlang is, asking for your thoughts on the stock. Do you think this stock is the cheapest amongst the other IT stocks like Infosys and TCS at the current juncture? Should one look at, getting into it or wait for a dip?
So IT pack as a whole, whether you take TCS, whether you take Infi or TechM, is still not out of the woods. IT still continues to be in a bear market and no difference with respect to Tech Mahindra. This current rally I foresee will get sold into when prices come around 1,080 to 1,120. That level, there is an area of supply and there is a convergence of multiple averages also happening there, the smaller averages. So I wouldn't suggest a buy at all. Right now, on the contrary, it's on a sell level. If he wants to take a value buy, then the level to look out is closer to 1,000, around 1,005, 1,007. But right now, definitely not go long.
Since we are talking about large cap IT stocks, I want to get in your thoughts on Coforge as well. Bearing PE has, once again cut stake in the counter, and this stock has been in an uptrend. Over the last 5 days, it is up 7%. And over the last 1 month, this stock is up, over 7% as well. How should one play Coforge and some of the other mid-cap IT stocks now?
So if you want to definitely get into an IT names, it's always better to wait for a more significant buying area. If you look at Coforge, that area is around 4,010, that is 4,010 on the chart, which is about 2.5% below current market price. So if one definitely wants to go long on IT names, although I would suggest there are better sectors out there, they can go long at 4,010 and keep a stop at 37.65. The first target they can expect is 43.50 on this. That would be the level to go long on Coforge.
Right. Well, let's also take up a query on the railway pack then. Sahad has written in and he wants to know your thoughts on RVNL. We've seen a stellar rally come in on the charts of RVNL. You think one should wait for the stock price to actually cool off before thinking of entering into this one?
So actually, if you look at this particular counter in railway, it has broken out after a very, very long consolidation. Whenever a breakout happens after such a long period of consolidation, these breakouts tend to stay. So I'm definitely bullish on this one. But from an entry point of view, like I said in the previous one, if a stock rallies up 30-40% in 2 days, which it has happened, I think it's moved from 76 all the way to 118. It becomes difficult to enter because all your indicators go haywire. So in this one, if he still wants to take in a value buy, I would suggest to wait around a price close to 110. It's currently trading at 118. And maybe he can keep a stop at close to 100 and look for higher targets. But right now, at such a peak, I'm not very comfortable going long.
Right. And what about Ircon? We also have a query on Ircon coming in from Ashok Kandukuri. How should one play this one now?
So same thing, all these stocks, like yesterday it was up 16%. So if you want to go long again, purely please do it on an intraday perspective. If you're looking for a value buy, wait for the momentum indicators to cool off. I can give you all a level. The level would be around 80, 81. Currently it's trading at 86. So around 81, one can initiate a buy. The good part about Ircon is that it has had a gradual up move. Which is why also this makes it a good contender. The previous two names that we were discussing had a little bit of a spurt. But if you look at Ircon right from the beginning of March, right from 50, it is almost moved 70% on the upside. So this makes it a little more stable from a value pick perspective. Around 80s, one can look to enter. for higher target.
Right. Let's focus in on some of these Adani group of stocks. We're getting some queries on our live feed. Rahul Lokineni has written in, and he wants to know your thoughts on this group of stocks. Adani Green saw a great, set of numbers in the fourth quarter, on the back of which we saw a good rally coming in yesterday. Out of these stocks, which have staged quite a bit of a recovery after the January Hindenburg report, which stock would you advise investors to look at? And if they are holding on to some of these Adani stocks, should they continue to hold now?
So out of the entire Adani pack, the one that I prefer the most is Adani Ports. Now, if you look at the Adani stocks, they're all making similar technical patterns. It's a very popular pattern called cup and handle or a descending triangle. Now, a breakout for Adani Ports is most imminent in this, and the level for this breakout is around 720. So anybody who's looking to go long should prefer Adani Ports and look for a level above 720 to initiate a long. From a little longer term perspective, I would not suggest to get into the Adani counters as yet, because there is still a lot of uncertainty out there. If you look at the longer term charts like monthly, it is still not crossed over your short term moving averages. So from a long term perspective, this is still a no. But from a short term perspective, once it crosses 720, one can play for a good 6-7% on the upside.
Right. I also want to get in a query on ITC. This one's coming in from Akshay, and he wants to know your thoughts on this. Now, this stock is above the 400 mark. It has been able to sustain above that 400 mark. And, over the last 5 days or so, it has gained somewhere around 4% or thereabouts. Should one hold on to this one, or, look at entering if they want to, given the fact that it has cooled off a little bit in the last 2-3 sessions?
So I've been recommending a buy in ITC right from 380 on different forums, and I continue to say the same thing. The stock is looking very good on the charts. It has had a gradual move up. It is hugging the band and moving up. The Bollinger Band indicator, it is hugging that and moving up, which in technical terms is called as walking the band. So definitely, if he's invested in the stock, continue to hold on. The story is looking good from both technical as well as fundamental perspective. If somebody is looking for a specific level to enter because they've missed the rally, they can enter close to 410, 412 levels and keep a stop loss at 395. But if he's holding on to the stock, definitely continue holding on. The charts are looking good both for the short and medium term.
Very quickly, I want to squeeze in 2 more queries, even though we are out of time. One is on M&M Finance. Raju Mavila has written in, and he wants to know your thoughts on this one. The stock hit 52-week highs yesterday. A good performance coming in the fourth quarter, and even the April business update is pretty encouraging. How should one go about playing this stock now, M&M Finance?
So yesterday's price action in M&M Finance signifies that there could be short-term consolidation in the stock. It's actually formed an inverted hammer right at the top of the upper band. So that could mean some kind of consolidation in the intermediate. But if you look at the medium-term structure for the stock, it is definitely looking good. The price can consolidate and maybe come down to about 240 odd levels where one can initiate a buy. But if somebody is already holding on to it until the current swing low is broken, definitely hold on to the stock for higher targets.
Right. Last query on the OMC pack. Given the fact that crude has cooled off quite a bit and Brent around that $75 per barrel mark, Raja Pasala wants to know your thoughts on HPCL, and we also have a query coming in on IOC from Jayesh. How should one go about playing some of these stocks, given the fact that we've seen crude cool off quite a bit over the last few days?
I would bet on HPCL or Hinds Petro currently. Compared to the two names, if the gentleman is already invested in the stock, he can continue to hold on till the 8-day EMA is holding. I repeat, the 8-day exponential moving average is holding. One can hold on. The stock is currently in a resistance point. It's at its previous high level, which is around 258 odd levels. So it might face some resistance over there. He might have to be patient. But once this 258 and 260, this level gets taken out, the stock would break out of multiple patterns and looks good on the chart.
All right, Rahul, thanks a lot for taking out time and addressing all of your queries. But before I let you go, any stock recommendations for our viewers this morning?
Yeah, so Reliance as well as Maruti both are looking good on the charts. First, I would suggest one can go long on Reliance. Like I mentioned, Nifty is in a congestion zone, so we're giving a buy at a little lower level. The buy is at 2393 with a stop loss at 2324 with a target of 2495. The second one in Maruti as well, little lower than current market price. We are giving a buy at 8650 with a stop of 8400 and a target of 8890. That is Reliance and Maruti, both on the long side.
Well, Reliance and Maruti on the long side. Recommendations coming in from Rahul this morning. Well, Rahul, thanks a lot for taking out time and joining us and sharing your thoughts with us. Well, with that, we are completely timed out on this edition of Morning Trade. But don't go anywhere because coming up next is Opening Bell.